Good morning, everyone. Today is Monday, September 15th, 2025, and let's get the ball rolling. So, the first of all, TSX slipped around 0.4% on Friday, which, it's the worst levels of the day. Most sectors ended lower. Consumer discretionary stocks were the biggest hit, with tech, industrials, and consumer staples were losing ground. Financials and materials also and real estate came down as well. On the flip side, healthcare did go up, and utilities and communication and other services and energy also went up as well, which is totally opposite of what happened the day before. So even though the TSX slipped by a little bit on Friday, overall for the week it went up by 0.8%, and which hitting higher ceilings, higher, it's going higher. Thinking like it's like running a marathon. So even though one day is bad, it's not overall, worst performing. And the best performance for healthcare. Investors kept on betting on defensive plays amid rate uncertainty. And the worst performers were, as I said earlier, consumer discretionary, which came down by 1%. Weaker spending signals are making retail and leisure stocks a little bit nervous. So in simple terms, it's like a dinner table where everyone is tightening their belts. Luxuries do get cut first, but people will always keep on buying medicine. So your necessities will still be bought. So, that's why a lot of investors are going towards the necessities. And now the next thing is bond yields are still coming down, which is a really good indicator of what's to follow. So the 2-year came down to 2.53. 5-year to 2.78, and the 10-year to 3.12. So everything overall is coming down gradually. So this is the best thing that can happen as a good indicator of what's yet to come about the mortgage and the Bank of Canada. So bond yields coming down means mortgage rates are coming down, and banks are holding steady on their rates for now because they are not passing the relief to the borrowers yet. Eventually the banks will have to, but not as yet. And when it comes to real estate, the Toronto market held steadier. Again, the asset sell ratio was around 1, which means it's perfectly flat. So sellers and buyers were agreeing on the price, more so around the listed price itself. The average buying price was around $1 million, which was up by 2% from the previous week. The listing to sales ratio is my personal favorite indicator, which was around 21%. It's still a heavy buyer's market, but waiting for Wednesday's Bank of Canada rate, that could change, but not drastically, but a little bit of change will come in. Now, more homes are hitting the market, but buyers are still cautious overall, and sellers haven't lost control yet, because if they did get into a mortgage that was a lot higher, for them to sell the property at a loss, it may not be worth it for them. So that's why they're kind of holding the prices steady for the time being. Now, the other thing I want to talk about is the building permits, which was released on Friday. So StatsCan released the July's building permit numbers. Total permits edged around 0.1 to $11.9 billion, mainly from weaker non-residential demand. So not really residential, which is what we mainly care about. So non-residential demand permits fell 5.8%, led by industrial, which is around 23.3%. Alberta saw a sharp drop in institutional projects after hospital approval spiked in June. So everything is kind of going the same direction, which is not so good. And the next thing is the residential permits jumped 3.8% to $7.3 billion. Ontario was the engine here. So $497 million projects were launched, and Toronto leading the multi-unit projects by $330 million. So the initiatives and incentives are working, but again, in this economy, it takes a while. So overall, there's about 24,000 dwelling projects that were authorized in July, up by 1.9% from June, but it fell overall compared to the year before, which is around 1.6%. But more residential projects in the pipeline mean housing supply is slowly catching up, especially in Toronto. But the industrial slowdown highlights an uneven construction activity. Builders are betting on homes, not factories. So this is kind of scary when it comes to unemployment. As much as it's important to build homes, it's more important to build factories and prospective jobs in the future. And the next thing I want to talk about is an appraisal thing that happened last week. So a buyer client of ours offered for a home, put an offer for the home that was listed for $688 in Brampton. They bought it for $750 because they really needed to move into that neighborhood. Now, surprise, surprise, just a month ago, I believe, there was a refinance that we did, and the appraisal came back at $710 for a similar property in the same neighborhood. Now, what I'm looking at is I feel like purchases are getting appraised a little bit differently compared to refinances. So that's something to consider as well, right? But overall, this is your recap, and happy Monday morning. Enjoy your day, and let's get some CPI data tomorrow, and let's see what happens. See you guys tomorrow.